Welcome to Stock Talk with Mike. So we've seen the market sell off very hard the last 2-3 weeks now, particularly the tech sector, which is in correction territory now. And growth stocks across all industries have really been selling off quite hard. And I do feel like times like this are a great time to be adding to your portfolio, start accumulating additional shares of your highest conviction holdings, but also taking new positions in maybe stocks that have been on your watch list for a period of time and you've been waiting for a pullback. Now is a pretty good opportunity to be looking at those companies as well. So I've been really actively buying the last couple of weeks. I've been probably more active now than I was the entire back half of 2020, where I was really a net seller, if anything, just kind of trimming some of my biggest winners, just trimming them down a little bit to keep them properly weighted. I was buying quite heavily back at the end of March, early April. But after that, it's just the market's just been so frothy. It's been difficult to find opportunities to buy until now. So in this video, I want to talk about 5 stocks I've recently added to my portfolio that are new positions that I'm looking at as long-term investments, unless anything really changes with those companies, and I'm going to be looking to accumulate more shares of these companies. And then 5 other stocks that I've actually added to my existing positions and taking advantage of this market pullback. So if you like this kind of video, it'd be great if you consider subscribing to the channel, and it'd be great also if you give this video a thumbs up. So let's get right into it. So I'm gonna start with 5 new positions that I've added to my portfolio that I'm really excited about. These have been stocks that have been on my watch list for some time. But before I do that, I must say that I have no idea if the market's hit a temporary bottom, and I don't really care. I know with these companies, even if the market was going up, right? If I saw one of these individual companies drop by 20% or so off the highs, I would definitely be looking at adding. So that's the way I'm looking at this. And I still have room to add. So I still have a lot of cash on the sidelines. And if these drop any further, I would look at adding more. So I just sort of started building a position in these, and I still have a lot more I would like to add, at least double my position in these. So if they continue to fall, certainly if they fell another 20% from my initiated position in any of these, I'd be probably doubling up my position. So first up is Shopify. So Shopify, this is looking at a 1-month chart. It shows it down about 12%, but it's actually a little more than that. It's actually recovered a little bit, like a lot of these did actually on last Friday. So I've actually nibbled away at some Shopify, which is a company that I've just watched on my watch list for a long time, continue to go up and continue to go up as they continue to beat their own guidance, continue to have massive revenue growth. And I just look at a company like Shopify and their ability to create e-commerce for small businesses online, and that trend continuing. I just see Shopify being a much larger company 5 years from now than it is today. So I'm really happy to be a part owner of Shopify. So that's one of my new positions. Another one is Pintrest. I picked up Pintrest because it actually trades at somewhat reasonable valuation with a forward PE in the 50s, but a really good PEG ratio, so a price to earnings growth ratio. And it just has really high revenue growth as well, and I think still a very large runway ahead of it, and still a pretty small market cap overall. Really happy to be an owner of Pintrest. Things got a bright future ahead of it. Trade Desk is another company I've talked about on the channel, and it's just been one of those real high flyers. So they're a digital advertising company across a number of platforms, even streaming TV, for example. And in the last month, they're down about 24%. So I nibbled at some Trade Desk, hoping actually to pick up a little bit more because it's dropped a little further since I've picked up some shares. But that's a really interesting company that I'm excited to own now. And also I picked up some Enphase, which has fallen really hard. So it's down about 26% or so in the last month. So they're the solar energy company. Pretty good growth rate as well. I think it's around 25 or 26%. Valuation is coming in a little bit, starting to look a little more attractive there. And I wanted exposure to the green energy space, and it seemed like Enphase was the best fit. It's been a long time since I've been a holder of any green energy companies. And honestly, solar companies for a number of years just did nothing. And, I finally gave up, and they've done really well this past year. And seeing a little pullback here, I think it's time that I stay invested in green energy forever at this point. And another one I picked up is Skillz. So they're the gaming platform that basically offer games that you can wager on and bet real money against other players. So really interesting company, a really interesting concept. And they're down about 27% or so in the last month, and it's been a bit of a high flyer. So I was happy to pick up some shares of Skillz and at least have that initiated position that I can look to add to if we see further market pressure. Next are 5 companies that actually built up or added to existing positions in during this sell-off. And first up is Nvidia. So the GPU or graphics card and computer chip manufacturer. They are just a leading cutting edge player in the AI space as well. And they just reported phenomenal earnings. And it was right during this sell-off and got no love and just continued to fall. And they haven't dropped as much as a lot of the other high growth companies, but their valuation's looking pretty attractive. And I think they're so well positioned for continued growth. And I just wanted to maintain them as definitely one of the top 5 largest positions in my portfolio. I think it's a nice safe bet with a lot of upside potential. The risk reward here is really good with Nvidia. So ticker NVDA, I recently added to, and I'm really happy about that. It was much higher than my cost basis still, but I hadn't added to Nvidia in quite some time. So I was happy to do that because their actually valuation, even though the share price has gone up, their valuation has actually come in because their revenues and earnings growth has been so big. Another one I added to on a big pullback on Friday, I believe, was Palantir. So I almost doubled up my position, and I'm back to on the positive side with Palantir. I'm in the green again, buying that on the dip, and then it saw a bit of recovery again on Friday. But I'm fully invested now in Palantir. I have a good position size, about a 5% weighting in my portfolio. So I'm pretty happy with that. I think there's just going to be continued increased demand for their services with Foundry and the amount that they can save companies through their ability to basically navigate through real complex data sets. And that's only something that's going to continue to grow and be relevant to more and more industries as we move more digitally and there's way more data collected. So I really like Palantir for the long term, and they have a really good growth trajectory ahead of them, especially as they move more into the commercial side. Historically, they've been really focused on government. So I think there's still a huge runway ahead of them, and their ticker PLTR. The next one's Unity. So I've been picking away at Unity really stubbornly as it continues to fall. It's only down about 26%, I say only, the last month or so, but it actually has sold off quite heavily even before that. So we're down at least 40%, I believe, or so off the all-time highs of a few months ago after the share lockup period that was announced recently and some concerns around their last quarterly report. But they are the leading basically 3D engine for game developers for developing applications and games. And I just think they're so well positioned as one of the best plays on the gaming industry in general. And they're going to be moving aggressively into other markets outside of gaming as well. So I just see them having that sort of 30 to 40% revenue growth year over year for several years to come and more. It's one that I wanted to have a significant position in, and it's again one of the top 5 largest positions in my portfolio now, and I'm quite happy with that weighting, and probably won't even be adding more even if we saw additional pullback in Unity at this point. So I've loaded up on a few different occasions recently on pullbacks. Next is Redfin. So I really like Redfin as sort of a disruptive play on real estate. And this is a company that I've been invested in. I was a bit early into Redfin. I've been invested in them in probably a few years now. And it just performed so well in 2020 that throughout 2020, I was skimming a little off the top, still maintaining a good sized position, but just trimming a little bit because it seemed like it was getting a little frothy. And, it just kept going up. And finally, I've seen his share price drop down to where it was about 20% or below where I had taken some profits off the table. And that was where I kind of jumped back in with those shares and added back up, topped my position back up and kept it weighted in my portfolio. So it's not really about reading charts for me and trying to look at, the short-term movements in a stock. It's really just about portfolio management. I don't like, if I believe in a company, I don't like it getting too heavily weighted or too underweighted in my portfolio. And that kind of correlates with sell-offs and big up markets. When it moves up aggressively, I'm going to be trimming a little bit. So on those big green moves, I'm going to be trimming. But when they sell off aggressively, I'm going to be adding. And that's generally done really well for me. And next is Teledoc. This is a company I believe extremely a lot in. I think they're still well positioned for a lot of runway of growth ahead of them. They just recently gave great guidance for 2021 as well. They're still expected to grow like a weed. I think a lot of people look at them as a pure pandemic play, and I think that's so far from the truth. I don't think this is a company that's going anywhere. It's by far the leading player in virtual healthcare, and this is again one of the top 5 largest positions now in my portfolio. I added to my position in Teledoc after it done so well through all of 2020. I'm not surprised that during this sell-off, it's retraced a little bit. We're down over 30% off the all-time highs. So it's a company that I've been nibbling away at, adding some more shares back in. Much higher than my cost basis. I first got in this thing in the 30s, and now we're seeing it well over $200 a share. So even close to $300 a share. So by adding now, I am increasing my cost basis, but I'm just really focused on keeping it one of the largest positions in my portfolio. And that's pretty much it for moves lately. And there's still a number of other stocks that I'm looking to add to that are in my portfolio that are getting sort of close to my buy points here. So I actually have a bunch of buy orders in that are hopefully might get triggered here if we see additional pressure. So I have Square as one of my largest positions. I think it's the second largest position in my portfolio right now. But if it sold off a little, if it fell below 200, I'd be looking to buy some more Square. Crowdstrike is a company that, again, I've owned for a very long time, since shortly after the IPO a few years ago. But it's just was such a high flyer in 2020. And even though it sold off pretty aggressively, around 20% maybe or so off the all-time highs last week or two, it's still got quite a rich valuation. It is a SaaS company, and they demand a high valuation, but I just couldn't quite pull the trigger on adding to my position at CrowdStrike yet, because I think these kind of really high valuation stocks, we're talking 50 times sales or more, are definitely going to be the ones that are going to continue to sell off the hardest right now. So I am hoping to add to this. It definitely gets into like the 160 range or so. I'd be adding to some CrowdStrike. Canopy Growth, the biggest MJ player out there, it's down about 30% in the last month, and it's my only exposure to the space. I really like that they're backed by Constellation brands as well, and they're moving into like drinkable liquid MJ drinks as well. So I think that's really interesting play. And yeah, it's one I've held for quite some time, and it's starting to look pretty attractive here to add to my position in that one. Yeah, the next is Jumia, which is the e-commerce player in Africa that I've done a number of videos on. I find it just a fascinating company from the speculative side of things, and I really like its odds of being a really monster outsized returns company in the years to come. But it's extremely volatile, and it produced a ton of profits for me in 2020. And I did trim some profits along the way in 2020, but I still own a significant amount of Jumia, and it sold off like 42% in the last month or so. So it's about 47% now off the all-time highs. This is a stock that if it falls much further, I'll definitely be looking to add back some more of those shares that I trimmed back in 2020. So definitely watching that one very closely. I think for all 5 of these, I actually have buy orders in that are good till canceled, kind of at a set price. Typically, I have them set at about 20% below maybe the last time I took profits in a company, or if it's a new position that I've recently taken on and I see the market falling like this, I'll set a buy order and just set it to forget it. So set it good till canceled, and it'll be for 20% below where I initially purchased shares. And they get triggered when they get triggered. Sometimes they'll sit there for quite some time. So anyways, I just wanted to show you some of the stocks that I've been looking at and the moves I've been making. Again, I've just been aggressively buying and hoping to have more orders filled this upcoming week. Well, I guess, but if I don't, maybe it's a good sign, because that means the market's moved up as well. So hopefully you're finding some good opportunities there and you're doing some buying yourself. That's what I have for you today. So good luck and happy investing.